Cryptocurrency markets tremble as Bitcoin takes its first major plunge since its run-up began several weeks ago. Is this the end of the bull market and has distribution began? Find out today in our exciting episode of the Breaking Bitcoin Market Update. Welcome back to the channel, everybody, and for another exciting episode of the Breaking Bitcoin Market Update. I am your host, Justin Wise, lead analyst at crackingcryptocurrency.com. Hopefully everybody is doing fantastic on this glorious Monday where it is an Arctic winter storm where I am from. So I hope you guys are enjoying the Bahamas, the tropics, kicking your feet up on the beach, or if you're not, at least you've got that nice motivational poster in your office where you are grinding out the necessary hours on your trading strategy. Either way, we're going to have a good show. We're going to talk about Bitcoin today, what's going on in the cryptocurrency markets, and the best opportunities to profit during can we even call this a bear market anymore? Time will soon tell. Anyways, if you guys would like to support what I'm doing on this channel, right down there, I believe, I always kind of like point off to the side of the screen when I do that, but right down there is the like button so you can show some love for the video and our team, and the subscribe button if you never want to miss an episode. If you'd like to work with me or my team throughout 2023, lots of ways to get involved and take advantage of everything that we offer. Links down in the description to everything you could possibly need in life. With that out of the way, if you have any questions, drop them in the live chat as always, and let's break down today's price action. Okay, here we are in the live chat. Shout outs to Crypto Rick, Starman Jack, everybody else I saw in the live chat. Beautiful people, I appreciate the support as always. Hopefully you guys are doing great. We've got a big red candle. Yes, we have a big red candle. Oh my God. I feel like Peter Schiff right now. You know what I mean? I've been screaming at the sky. I was like, it's got to reverse for like a week. And now it's reversing. So, yeah, anyways. All right. So bad news for the people who tried to get breakout long on yesterday's daily close. Again, this is kind of what I hinted at on Friday when we did our last stream. I talked about the possibilities of this and what generally happens. Now, it's easy to get kind of faked out or tricked by maneuvers like this. And that's why sometimes the daily time frame can be a little bit treacherous for breakouts just on price action. That's why we do always prefer our indicator-based strategies. Of course, you can have a price action strategy, but as we can see, sometimes you run into situations like this, particularly with Bitcoin, where the weekend can have volatility. Price can often run far away from the average price, but by Monday open, we usually start right back where we began, and that's exactly what happened today. We had this nice run up on Sunday yesterday. Saturday was pretty flat. Price didn't really do anything. And then Sunday, we had this pretty good looking candle, you know, closing above the kind of the current intraday range, not above daily resistance, but closing above intraday resistance. And then Monday has just been this bleed out all the way down. And as the trading session opened up this morning, we were right back kind of in the middle of that breakout area, and it looked uncertain whether Bitcoin was going to make another run. I actually took one losing trade today. I did try to take Bitcoin back up as we spiked down. Hourly looked like high volatility. All of my momentum oscillators were overbought. So again, I am 1 for 0 on the day trades today. However, my daily short is now doing pretty good. So is the 20% of my weekly reversal short position that I accumulated last week. Those are all now in the green. And since, again, I'm not too happy about that. It is what it is. It's cool if price just goes down from here. I'll make a good amount of profit on my daily short where I don't get the $400. I get significantly more than that. When I'm day trading, I'm looking for that $400 profit, $200 loss, 360 trades a year. But for daily time frame trades, the position sizes are a bit larger. So if we hit TP 1, 2, and 3, we'll be doing quite well. But for the weekly position, I am okay with the fact that this might just be a retest of the bottom range. Price might go back up. Again, you have to structure your trading strategy and your own mentality to kind of deal with these scenarios. You don't know which way the market's going to go. I don't care who is out there. I don't care what indicator you have. I don't care what amount of analysis you have. You just don't know which way the markets are going to go. And you have to be comfortable with that. You have to accept that. You have to accept that you could have the best technical analysis in the world, and then some large trader can come in and buy $1 million worth of BTC on the exchange that you're trading on and completely blow past your level of resistance. So anyways, comfort and chaos. That's how we do things. Strategic, objective, statistical. But let's talk about kind of what's going on. So here's the daily time frame. Before we get into this, let's just kind of go back it is a Monday, so let's revisit our previous weekly candle close and do our top-down analysis before we get into today's day trading opportunities and today's day trading session. For this, we're going to whip out our trend detection system comprising of the Kraken Cryptocurrency EMA indicator and our Ichimoku indicator. And we're going to zoom in and take a nice look. Now, we are in the Bybit chart, but for our weekly top-down analysis, I do prefer to look at the Binance BTC USDT chart. So we'd be making that switch right now. Feel free to follow along with me at home, guys. Again, what are the most important things to notice on this time frame with this level of technical analysis, this form of technical analysis? Where we're looking for trend, we're looking to see if price is above significant moving averages. We're looking at the relationship between those moving averages. We're looking at the relationship or the proximity of price to these moving averages and significant levels of support and resistance. We're also in general looking at candle size. We're looking at patterns in volume. We're looking for anything that can give us a little bit of inference on what the current trend is, because as predominantly trend following traders, our main job is to identify the trend and then identify opportunities to trade in that direction. If you don't know which way the market's if you don't know which way you assume the market's gonna go by doing top-down analysis and determining your trend, it's gonna be hard to determine in which direction to trade in on the lower time frames, especially if you're using any level of discretion in your trading strategy. Now, most people should just be using a mechanical trading strategy like I teach people how to make, but this is helpful for most people, and this is the content that gets the most likes, so that's the content that I make. Sorry guys. All right, so anyways, it's a victim of the machine. It's a cruel, cruel world. So as I've been pointing out very consistently, the 21 weekly exponential moving average and the Tenkan-san leading line, this is the green line and the blue line on my chart respectively, have been absolutely dominant in determining that we were in a bear market throughout all of 2022 and up until this break early 2023. We were just unable to get past them, particularly the Tenkan-san leading line, bashing us down every time we went for a run on that. It occurred significantly over here back in 2022 in March, so right toward the end of the first quarter. And then the 21 EMA kind of took over and was bashing all price attempts down. And then lately, or more recently, this mini run up right before the FTX collapse was swatted down by the Tenkan-san leading line. And then on that first kind of weekly breakout candle 3 weeks ago, we blasted past that and we've now ran and closed that gap. We've bridged the gap from our 21 weekly EMA and our Tenkan-san leading line pretty much all the way up to our 200 weekly simple moving average, which is kind of the overlying, this kind of zone right here between the 200 weekly simple moving average and the 55 weekly exponential moving average. Are two critical levels that I am identifying. So that gives us anywhere between 24,500 to 800. And then at the upper level is that about 25,500. So pretty wide zone. And that's the final zone that I'm targeting for our weekly swing position that we picked up down here around 17,000. We've been scaling out of that on the way up. And now we're mostly out of that. I got about 20% left on that. And now we've started doing the reverse. We've began scaling into our weekly reversal short. And 20% of that position got filled on last week's candle. So that's where we're looking at. We're looking to ease out of our long in this zone, and we're looking to ease into our short because we want to be prepared if either we draw down and retest, either we pull back here or sometime and retest a level of support, establish a higher low. And at that point, when that happens, and if we see some nice convincing upside from that, it does start to kind of look like this might be a more sustained rally. Now, I don't really see that from a fundamental perspective right now. Again, we've never really V-bottomed. We've never really, we've just never, period, V-bottomed out of a bear market in cryptocurrency's history. Doesn't mean it can't happen. Every moment of the market is unique. However, there's typically a significantly long period of accumulation and consolidation, as we've seen back in 2018 to 2019. Back in 2016, and then more recently in 2022 with the kind of the pull down. So generally, bull markets are very forgiving. There's quite an extended period of accumulation, and this is all kind of in theory with or aligned with Wyckoff theory, which I quite like for market structure and bigger picture thinking about the way markets work. But anyways, key points to take away from here: we are trading above the 21 weekly exponential moving average, the Tenkan-san leading line. We have resistance overhead in the form of the 200 weekly simple moving average and 55 exponential moving average. And so we're kind of in an area where the risk to reward ratio for longs is beginning to look a little less attractive And the risk to reward ratio for shorts is starting to look more attractive, particularly because my overall analysis is that this is still just a bear market rally, unfortunately. And I could be wrong, but that's what it looks like to me. So we also have a situation. I think that this down movement is completely natural. I was talking about this pretty much all last week because we were in a situation where pretty much all short-term holders of Bitcoin, not every single one, but the vast majority, were now in profit per on-chain metrics. And when that happens, when the majority of traders are in profit and short-term traders are the ones who are responsible for churning price right now, long-term holders are basically sitting on the sidelines, which is good for long-term investment. But short-term holders are definitely in control of current market churn, and they're likely to take profit. You know, when you have the majority of the market in profit, they're going to take profit and you get a pullback. So, and then if demand is high, then new buyers step in and continue the rally. So anyways, we're definitely seeing a pause, and who knows what this week will bring, but we're certainly seeing a pause and a significant shift now in the consistent bullishness that we've seen. This is the most significant sell-off that we've seen during this rally. And so in just a little bit, we'll go down and look at how these levels affect our daily levels to determine if we're actually in line to take some action on this. All right, weekly reversal system. I'm going to touch briefly on this. This is how we accumulated our contrarian, counter trend weekly long position. They'll be accumulated around 17,000. We identified bullish divergence. And then another significant thing is that collapse of FTX, while it shook me and most other cryptocurrency traders, notice that it traded below the lower boundary of the Bollinger Band on the weekly time frame and then traded back inside the envelope. And almost always when that happens, when we trade below, we trade up to the median line of the Bollinger Band. So that combined with the regular bullish divergence and the confirmation that we got down here from both CM Williams VixFix and the Laguerre PPO was kind of the impetus and my technical reasons for taking that position. Plus the fact that we hadn't seen any continuation from the FTX collapse and then we just went sideways for quite a long period of time. So kind of a sign of seller exhaustion, that there wasn't significant momentum or desire in the markets to continue to push prices down, and that we were now in the need of exit liquidity. So we needed to raise prices up and sell them off. And some of our smartest students in the premium trading group also agreed with me, and that gave me even more confluence because I like to work with good and bright people, and that's the people that tend to join the premium trading group. The other thing that was making me a little cautious of a reversal here as well, and again, this isn't a confirmed reversal. I'm not saying sell your positions, do your own analysis, make your own decisions. I'm not responsible. I don't make your decisions for you. Is the fact that we traded above the upper envelope of the Bollinger Band here. So again, the exact same thing that we noticed down here in reverse, wicking above, trading back down below. And again, typically when that happens, we retest the middle Bollinger Band, right? So anyways, that's all I'm going to say about that. Let's hop down to the daily now. And the first thing we'll do is we'll look at the trend detection system here on the daily. And just talk about this daily uptrend that has been existing. And the key point to notice here is that we've basically blasted through all daily levels of resistance here. We're trading above the cloud. We're trading above all major moving averages. And if we look closely at last week's consolidation period, and I actually want to switch over to, shout outs to Ron Legato, shout outs to Yes to Crypto. Thanks guys for watching the show. I'm actually going to switch over to this so you guys can see a little bit better, I hope. Let's just get this bad boy over here. There we go. So this is our daily trend detection system. And I had talked about this almost 2 weeks ago throughout this consolidation period. I noticed that when the 8 daily exponential moving average caught up with price, so as price entered into a strong trend, it began moving quickly away from our moving averages. The moving averages are going to be a lagging indicator. They lag behind price. We don't use them to predict. We use them to assume. And when the 8 DEMA caught up with this consolidation range, the range was resolved and we broke out. And notice that something significantly different happened this time. When the 8 DEMA caught up with this consolidation range, we faked out, and faked out again. Every single time we touched the 8 DEMA, it was a buying opportunity intraday. Anytime price went down and touched this 8 DEMA, that was a buying opportunity. Because, and again, that's one way to look at it, the 8 DEMA. If you look at the intraday, like the hourly, you can see that at that point, price was just at support and oversold. So for multiple reasons to kind of pick up the position there for multiple reasons. But now we're seeing something different. We're actually seeing, and it's not confirmed yet, we'll see this in about 45 minutes, but we're seeing price trade below the 8 DEMA and actually looking and threatening to close below. And I think if we close below, we can already see that this is the most significant red candle that we've seen in this uptrend. So a close below would be a technical indication that something is different. bears have now had the ability and the strength to make price close below a significant level on the daily time frame. So do with that information what you want, maybe a potential initiation for a reversal short from this range, which is a position that I have already accumulated in this area. So weekly reversal system, again, not too much here. Again, I've been talking about the fact that we've been kind of in this danger territory for over a week now. Our momentum oscillator has been oversold since this consolidation range. And you can see this divergence that Minx has been giving, even though price has been climbing up pretty much not too incredibly powerfully since we entered this first range. But our momentum oscillator has been moving down while price has been moving up, which is divergence in any other term. And you guys can also see that volume as well. If you see volume in the background of Minx, volume has been declining. You can see that the trend of the volume has been declining as well. We're seeing lower highs on volume. So volume's been fading here as well. Okay. Leaving this, and we'll pull up the volatility system, and now we'll go down to the 4-hour time frame. And we can see different opportunities throughout this range. For example, we see that we're using BBWP here to identify volatilities, to try to identify opportune moments to enter the market. For example, here in this range right here, we can see that BBWP dropped down below the, not below the blue levels. The kind of the ideal signal that we're looking for here when using this particular indicator is if this level, if we actually go down, you could consider it oversold if you're thinking momentum oscillator type style. But if we go down below this blue line, you'll actually see that this particular indicator will flash these blue columns on the chart. And that is an indication that volatility is very low. And what is interesting about that is this is different. And this indicator doesn't tell you in which direction to trade, but it tells you in when the opportunities are there to enter into a position. You have to get your directional bias correct. But when volatility is very low, what follows low volatility? Expansion of volatility and movement, right? And that's what we're interested in as traders. We need price to move. We don't really care in what direction it moves, unless you've pigeonholed yourself in only trading in one direction. But if you can identify that there is likely to be a move sometime soon, then that lets you know that, hey, this is a good time to take a position. On the opposite term, this is the way on the opposite hand, when a volatility is very high, it's typically an unsafe time to enter a position because we've just had expansion and the market is quite volatile. So you have to be a little bit more precise, and the market isn't as forgiving when volatility is very high. So we had multiple periods throughout this consolidation range when volatility got quite low. Here, for example, following this drive down to support that we established here. So again, good opportunity to take the long. This other drive down got quite low here in this area. This drive down right here. And most recently, this drive down right here before we had this nice fake out. But again, a good 12, almost 22-hour trade right here. So a full day to take advantage of this run up that we had on Sunday Saturday night into Sunday morning. And then today and the end of Sunday has just been down only. And we are testing right now. We are testing range support right now. So again, Bitcoin's in a range and we faked out the top and now we've traveled back down to the bottom. So I do think that the way I have handled this is, again, I scooped up this long. I tried to long in the middle of the range, had a losing day trade today. But now that we're back down at the bottom of the range, the logical thing to do here is to look for the long position. We see volatility is not quite spiked. Generally, when volatility is very, very spiked, it's an indication that the price is likely to reverse. But we can also see here that our 4-hour stochastic RSI is oversold and we're at the bottom of the range. So pretty decent things. And we have a prevailing daily uptrend. So again, kind of the logic here is pretty sound. Looking for this meso time frame long position in this zone, in this range. Now, I would ideally, again, and maybe I feel more confident and comfortable taking this trade because I've already established a daily short position, kind of playing that daily reversal. So I really get the best of both worlds here. I get to play the range and stay in my short. And if price collapses and if I lose on my long, then I'm profiting either way. And these are the kind of nuanced positions, these double positions, these hedge positions that you can build if you can unpigeonhole yourself from only trading in one direction and, not commit yourself to being bull, bear, the other, but looking at the technical opportunities that arise in different ranges and different types of market conditions. All right, going to throw some tunes on in the background. Mr. Ether Robert Warner, welcome to the channel. Welcome to the show, my friend. And I see he hedged as well. So, okay, yeah. So 4 hour is looking like a long opportunity here. And the daily is looking like a short opportunity overall. So with that being the case, I don't want to get too heroic with my take profit level. I'm thinking maybe just a retest of the middle of the range and maybe just a retest of intraday resistance here around 23,179. 23,179, and maybe I'll leave half the position on to see if we run above 23,300, which if the daily is going to collapse here, if we are going to get follow through on the daily short, seems unlikely, but I do want to open myself up to that possibility. So that's the 4 hour. Zooming down to the hourly. Again, here's the scenario right here, guys. Price was collapsing, and this is right where I took my hourly long. And even though I was right, quote unquote, right, there was this nice 1% candle. I was targeting higher with my take profit. So unfortunately, on this recent move down, stop loss was hit. It is what it is. Losing trade. I position size everything correctly. Just a statistic. Now we're getting some pretty decent wicks to the downside here on the hourly and a little bit of charge back up. So again, I think we're going to use that 4 hour metric. Actually, I think we'll use the hourly on this one because again, I said I didn't want to be heroic with my take profit. So the first thing we're going to do for me is I'm going to 188.78. So that's going to be pretty with it. All right, so we're going to take the low. And that's 22,500 minus, whoops, not times, minus 188. I'm just going to do 188 because that's pretty big. R. What was actually, you know what? No, I don't want to do that. I want to filter for volatility. So let's, what was it prior to that? About 163. Yeah, we'll do 160. We'll do 160. Minus 160, 22,340. And okay. I guess I really don't have a chance but to be a hero, even for the 1-to-1 risk to reward ratio trade. Okay, that's not too bad. We can work with that. All right, so let's keep that in mind. 22,340. And we're just going to do kind of a cheat over here. Show you guys. Again, if I want to risk $200, if I want to lose $200 on a losing trade, then I can put in any account balance. So for example, I've got $10,000 in this account balance. Risk percentage of 2%, that is a loss of $200, right? So again, we can use any number, but this is just kind of an easy way to do it. Current price is 22,784, and stop loss was 22,340. Yeah, 22,340. Yep. All right, so that's going to be a $10,000 position size, $10,263. 10,263 divided by the entry price, 22,784. Oops. 10,263 divided by our entry price of 22,784 is going to give me the quantity of BTC I need to purchase, which is 0.45. So we're going to go long, a little less than half a Bitcoin. And so there we go. All right, bring this over here so you guys can see real quick. Long about 0.45. And we'll go ahead and set our TP and stop loss. 22,340. Boom. And then what do we need to target? 22,783. 23,236. 23,236, and we'll do half of our position just in case we run. 0.0 or 0. I don't know. 2. We'll do 2.3. We'll do the larger majority of it. Okay. Life's good. Oh, whoops. Sorry. And yeah, we'll either take the loss on the day trading account here. Again, just a logical place to look for that long, trading the range toward the bottom of the range. Volatility is pretty much exactly where I want it to be. And a little just a little early on my entry earlier today. Yeah, a volatility spike came just a little early, but again, you can see momentum oscillator oversold, but the trend intraday was just too strong to the downside. So here we are taking another opportunity, and that's just how trading goes. You wait for your opportunities, you take your positions, and you just need to win 65% of the time. Turn on some music to start my trades. Black Beauty Machine says it is just a pullback. Well, I hope for this trade. Evo, shout outs to you, my friend. All right. By the way, as always, let me know you guys if the music is too loud or if it's optimal. Second thing too, sound off in the chat. Like, what positions are you guys taking? What trades are you in? What platforms are you using? How are you, what kind of positions are you taking? Are you just long spot right now? Are you wishing you were long spot and kind of looking to buy around this area, looking at this as a value pullback? Do you think this is the reversal? Are you getting short on this maneuver? I always like to hear your guys' thoughts and opinions. Okay. Okay, we're going to look at the broader cryptocurrency market and talk about implications and maybe look at some of our bigger trending assets. But first, we're going to talk about... We're going to talk about my book. Yes, because it's out. If you guys enjoy the content, if you enjoy trading, if you enjoy technical analysis, but you feel that there are issues with your trading, that you're making some mistakes, if you guys would like some clear guidance on things that can help you improve your trading, my new guide is available. It's completely free. This is the 5 mistakes holding you back from profitable trading. I've been teaching and mentoring thousands of students all across the world for the last 5 years, and I've compiled a lot of my wisdom, my research, my notes into this book. I've identified 5 common mistakes newer traders, even experienced traders, make that tend to hold them back from seeing the results that they want. This is what they're trading, what time they're trading, their discipline, their routine, the structure, the way they think about position sizing. I cover all that. This is all actionable information that you guys can apply to your trading today. You guys can go get this. Again, it's completely free. It doesn't cost you a dime. First link down in the description, 5mistakes.crackingcryptocurrency.com. You can download your free copy of this guide today. And as always, let me know what you guys think in the Discord after you get it. All right, cool. Let's get back to the analysis. We'll put me over. Actually, I think I was over here. Let's go over to the right. All right. Yes, we're over here. Hopefully you guys switch it up a little bit. I like change. I like variety. It's the spice of life. It's what keeps it interesting. Different. I like different. All right. We've got one Southside Playa Crypto. Hell yeah, man. Bought in at 15K. And he's, well, hell yeah, man. Glad to hear you're up, man. 100% from Black Beauty Machine. Crypto Rick says, I took a Bitcoin short on the 6 hour from 23,120. Oh, you dirty bird. Good man. And John Germain says, yes, I heard you Friday that after the weekend, there was a good chance BTC would return to Friday's price. It's just, yeah, it's not... It's just something that we often see. So, and there's a lot of fundamental reasons for it. We have the CME, we have the traditional markets, and those players typically aren't engaged in cryptocurrency on the weekends because those firms are not trading on the weekends. Their liquidity is not available. So, and again, maybe it's not necessary. Maybe that's not necessarily the right way to think about it. It's not like Goldman Sachs's cryptocurrency division is like, well, you can't trade because, the stock, so they're, obviously these institutions aren't as dumb as we tend to think they are, but it just is a fact that we don't see the volume and liquidity that we see during the week. So since these movements happen on the weekends, the way I've always thought about it and the way I've always heard it from other people as well, and I think it makes sense to me, heck, it seems to work, is that, you know, if we do get these bigger price movements, they're not really in line with what the market had intended, with what more traditional players had intended for the week. And so they just don't tend to have follow through. Very rarely will we see, almost never will we see breakouts that have follow throughs that start on the weekends. Again, it's like we'll pop up. Weekends are notorious for fake outs and Darth Maul candles. So we'll trade above the range and then like spend maybe a day up there, and everybody's like, oh my God, we're breaking out. I got to not spend time with my family because something's happening in crypto. And then they come in and they like take the breakout, and then they get wrecked because, you know, price typically, again, we have a meme for it, like price, the price at which the CME BTC exclamation marks, so that's the BTC ticker on the CME. The price at which we close on Friday is the price at which we'll open on Monday. So, let's see here. Mr. Ether Robert Warner says, I have a small levered short from 23,177. My hedge entry was better at 23,756. Does that mean did you take the entry at 23,756 at some point in time, or you wish you would have, or you did and you dropped it at some point? And yeah, Bybit is the exchange of choice. Okay, let's take a look at the broader cryptocurrency markets. Brought to you by CryptoBubbles.net. And again, as we can see, the broader market absolutely responding to the pullback. Here we see the correlation between the majors, the miners, the mediums, and the king Bitcoin, which is why we primarily just focus on Bitcoin. You guys can, people come in here all the time and they're like, what about X, Y, and Z? And I'm like, whatever direction we think Bitcoin's going is likely the direction these other altcoins are going. That's just how it works. Listen, I'm not saying that there's not opportunity. I want you guys to go find your own edge, find your own opportunities. But in general, you can just pretty much look at Bitcoin. And then if you want to be risky, diversify in other assets. And if you want to keep it a little bit safer. So, okay, what do we got? Pretty much everything down, higher single digits, some low double digits. Big losers of the day. We've got BIT, Luna. We've got Axie Infinity, Near, Sand, Flow. Let's see here. Zilliqua, the Graph, GRT. Yeah, those seem to be the big losers of the day. We do have 2 dots of green in there. So we do have Dash Pay up 4.7% and Didex up 7.8%. Apparently somebody needed to swap up a bunch of tokens so they could go short on Didex. So, yes, no, I see you. System for trading didn't let me short up there, and the hedge was discretionary. No, I totally get you, man. It's the thing about systems trading, man, and I'm certainly not perfect at it either. I'm just decent at it. Is when you commit to only trading one way and just executing against a certain edge, then this is like a bigger thing. All right, so let's talk about this. So let's take a little brief pause here and talk quickly about like productivity in general. People overestimate what they can accomplish in a day and underestimate what they can accomplish in a year. If you line up your goals and start making daily progress toward them, it is absolutely incredible where you can be in a year, where at the beginning, it might seem like you could never accomplish that goal or that task. The way to do it, and I'm telling you because I've tried all different kinds of methods, this is the way that works. You have to commit to a goal. You have to say yes to something. And once you've said in your heart and your mind that yes, you're going to do this thing, you're going to work toward it, you're going to have to say no to a lot of other things. Because if you say yes to a bunch of things, you're saying no to the thing that you really want to do. You have to discriminate. You have to be selective. You have to honor your time. You have to honor reality that you're just one man or woman, and you don't have all the time, resources, and energy to accomplish everything that comes across your desk. I get dozens of emails every single day. Now, a lot of those will be things I'm completely not interested in. Like, hey, will you shill our latest ICO project, which I've never done. Hey, will you shill our latest, like coin or NFT or whatever. Things I've never done and never will do. And so those are easy to kind of trash. But then I'll get like, emails from like other traders who want to do a collaboration or, projects or services or, these things that actually seem kind of neat, but I don't have the time, And sure, I could look into them and check out your website and get on a Zoom call with you and talk. And I'm sure it'd be awesome and cool and great, but I'm not doing that right now because I'm doing other shit. I've committed to doing other things. I'm completely revamping our Pathways to Profit trading course. I'm creating our beginner courses. So introduction to technical analysis, introduction to cryptocurrency trading, advanced technical analysis, advanced trading, options trading. These are all courses that are going to be available. We have a lot of the courses already available on our website. But the main flagship course that we have is very valuable, very comprehensive, and it's got a high price because that's what it's worth. And so I want to make easier, more digestible content that is cheaper and easier for newer students to get into and digest. We're going to be offering our indicators as a one-time purchase instead of included with the subscription because people have been asking us to do that for years. So all of these changes, and we're completely redesigning the website. So all of these things take a lot of time and energy, and I've said yes to them because those are the things that matter most in my life. And so I say no to pretty much everything else because it's not my thing right now, right? It's not even acceptable to be like to even give it any time because that would not be doing that thing any justice, and it wouldn't certainly be doing my one thing any justice. So that's my general advice. If you guys are struggling with getting things done, then it's likely one of the likely culprits is that you're saying yes to too many things, and it's just not a successful strategy. If you want to get somewhere, think of all the really successful people that you idolize, that you want to be like, that you look up to, that seem like very intelligent, very savvy business individuals or what traders. They're no nonsense, man. They know what they're doing what they're doing, and they don't have time for anything else. And that's something I've always aspired to be, and that's something I'm doing right now, and it is what it is. My time is valuable, and so I don't have time to just sit here and give time to things that aren't going to accomplish my bottom line. So little bit of advice. Hopefully that helps you guys out and gals. Okay, so let's get back to it. Okay, so what do you want to take from this? So bullish long traders are always going to view pullbacks as opportunities to go long. I do think that like I said, clearly I'm doing that opportunity myself right now. We're going to see how and if I get smacked in the face. Life is life. Things happen. Let's scroll over here. Black Beauty Machine says BitTorrent token, BTT, is a general wealth coin. Not sure what a general wealth coin is. Being so cheap and follow. Yeah, of course. Starman Jack, shout outs to you, my friend. Thanks for coming to the stream. Man, Justin run out of things to say. Maybe. All right, well, let's watch. We'll just watch price for a little bit. Comment on anything interesting I see. Here we are down to the 15-minute time frame. And again, so here's some interesting things to point out, right? So where do we see? I'm going to teach you guys how invaluable BBWP is right here. So again, we can basically see. Let's see here. It would have been, yeah. So right about here in this zone is when I attempted the earlier intraday long. And as you guys saw on the hourly chart, BBWP got pegged right here in, let's call it overbought territory, but high volatility area is what we're really looking at. Big spikes of volatility. And you can see that when volatility gets pegged out, basically the movement kind of stops, right? And we lose that momentum and we basically go sideways. Where there's not a lot of trading opportunity. right? There's a lot of opportunity to make money here if you were short. Anywhere throughout here, if you got short, you got this big move, you made a lot of money, right? And anywhere throughout here, even though volatility was relatively high, if you position short, you could have made a lot of money on this movement down here. And look at the difference in danger, right? So let's actually put numbers to this. So if you got short, let's say at the worst possible place, so at the bottom of this red candle, if you went short here, then the worst drawdown you had to sit through was 0.72%. Now, if you would have entered at the worst place possible down here at the bottom of this candle, you had to sit through 1.34. So almost twice as much drawdown you would have had to sit through. And the reason why is because the volatility here is significantly higher than it was here, right? You can see that volatility here is on the decline. And here we reach this inflection point where volatility is pegged to the low. And that's when you want to enter. You have to get your direction right. But it's those low volatility moments that set up these big movements. And then it's these spikes of those big movements that let you know that this is a good place to take profit or reevaluate your position. Oh, generational wealth. Oh, hell yeah, man. Hell yeah. And so sorry, I point that out to identify the situation that we have right now, right? Volatility is dropping, right? Throughout this range, and we might not get there because volatility might spike here, but we're kind of in that, we're going low here. And this is a decent time to look for entries because usually a big spike precedes that. So, and again, other things to consider here, pretty simple things here. Let's zoom out, reset our chart view. We've got this level of support. You can see it as the dotted green line on my chart. It's coming in at 22,210, the level we've marked off here for a while. It's just kind of the bottom of this pause in Bitcoin's uptrend, and Bitcoin's oscillated between these two levels. And we're coming back down toward the lower end of that support. Now, is it possible that this move doesn't significantly move up? We do have another leg down. We actually sweep these lows before moving up? Oh, that would be nasty. Yes, but it's possible. Yeah. It's even probable. So another approach would be setting limit orders down here. Now, Bitcoin Trading Challenge Bennett, he likes to trade like this, where he won't look for your standard kind of oversold volatility high, all that kind of stuff. He'll look for these situations where price trades outside the range and then looks to get long there. That's one way he likes to trade. Averdunk says, do I think it will drop down further now? Well, I hope not. I just took a long position, but again, at the same time, I'm also short. So I picked up a short position. I'd have to log into my sub account to see it because I'm doing my short on the sub account, but around here, around 23,000. And the reason why is because the daily does look overbought, overextended, and now we've had this first significant sell-off. We are trading below the 8 DEMA. So all those things are significantly more likely now that we've had our first sign of failure. On the other hand, we are also at the bottom of the range. So again, the way I'm personally playing this is I'm actually long now, up, and then I'll kind of reevaluate. I don't need to add to my short, but if I wasn't short and I was playing this long, I would look to add to my short or enter a short around 23,100, 23,050. If I was being really thirsty, and I didn't think price was going to go up there. And if we get an hourly close below 22,210, I would momentum short. An hourly close, I would go for that short. Invalidated if price comes back up and closes above 2,210. So exactly kind of the same thing here, guys. So let's look at this scenario. Let's look at how we could have traded the breakout, and then that'll make sense when we look at what's going on right now. So you can see that I've got two levels of resistance on my chart, what I call intraday resistance and what I call daily resistance. The difference on those is just where's the high of the daily as opposed to where's the highest 1 hour high. And I like to see, for a breakout, I want to see a close above with very little wick. So this candle right here, where we have a very long price tail or wick, that doesn't count. That is not a breakout candle. This one is, though. Very little price tail, nice strong close above. So let's say you long this candle. Well, you long this candle, and I mean, you see this, you should be taking some sort of profit. And you should probably have a TP get it. This is why we do 1 ATR. But let's say you didn't take any profit. You didn't see any of this coming. You stepped away from your computer. You were getting a massage, getting your nails did. Okay, it's cool. I get it. You go, girl. And you have this hourly close above. And this candle right here that closes back down below your level at which you went long. So we went long because price closed above this level with very little wick. And this candle closes down below. You close your trade here, period. You take a loss. Yeah, you take a loss, but you don't take this loss. You just take this loss. Take the small loss. Take the small L. If you can reduce the size, the quantity of your losing trades, and if you focus on making that the most important part of your daily routine, like, I just want to lose less money. I just want to lose less money. I just want to lose less money. That is where you focus on. Everybody goes about like, I want to take more winning trades. I want to take more winning trades. Well, okay, that's really hard to do. Like, that takes time. That takes time, experience, how to manage a trade, testing different systems, optimizing your system. But it's not hard to just lose less because you just follow your plan that you established when you set up the trade. Okay, I'm going to exit if price goes here, and I'm going to take profit if price goes here. Problem is, when that happens, when price goes here or here, people don't want to close, here or here, they don't want to close their trades. They get greedy if price runs up near where they wanted to take profit. This is why I recommend setting a hard take profit and a hard stop loss. Don't make it an issue. Don't make it an ability to renege on your commitment to trading properly. You were supposed to take profit here. Who cares if it continues to run? That's not the trade you were trying to take. You're gonna, for real, man. Also, one of the mistakes I talk about in the 5 mistakes holding you back from profitable trading. Stop playing around with your trades. Let's see here. Greed ruins everything. Do I think it will drop down further now? In the long term, yeah, I do think we are due for a pullback here on the daily and weekly for BTC. That's definitely the situation that I'm looking for. I've been long on Bitcoin since about 17,000, and I'm about 80% of my long position. So I've got 20% left of my long. So I could see Bitcoin running up to, and maybe we have a pullback this week, next week, whatever. Maybe this continues downwards. I can see Bitcoin continuing to run up to 25,000 before we have a reversal. So I've started scaling into that reversal short. So I'm almost out of my long. I'm starting to scale into my short. I'm also short on the daily, and then I'm long on the 4 hour. Well, I'm long on the 1 hour because we decided to take it on the 1 hour. In the long term, I think that this is a bear market rally, and the most likely scenario is that after running up to 25,000, we come down and at least test 18. At least test 18. And again, sorry, trader talk, but the same thing is too, like, Bitcoin is full of surprises. So just when you think you understand it. How much money do I use on a single trade compared to my entire capital? Oh, okay. Hold on. Let's see here. Okay. So I just took a day trade. That was about a $10,000 position. I will use anywhere from $5,000 to $45,000, sometimes more, on a daily swing position. And how much? But I don't think that was your question. How much money should you use on a single trade compared to your entire capital? Well, okay, that depends. If you're using, this is kind of backwards, but I recommend people use leverage in cryptocurrency. And I recommend they use it appropriately, because if you have access to leverage, you can take the correct position sizes where you can actually make money. And if you position size correctly by using a tool like that we give all our traders, like this position size calculator. For example, let's say you have $10,000 in your account and you want to risk 2% of your account if you're wrong. That means that the max you can lose is $200, maybe plus a few dollars in fees. You put in your entry, you put in your stop loss, and this is going to tell you exactly how much to buy. And as you can see, this is calling for a position size of $10,263. Well, we don't have $10,000 in our account. Well, that's fine. We can use margin. And in fact, we could take this position with $2,000 and just use 5x leverage, because our distance to our stop loss is only 1.95%. You can use 5x leverage and you can have a stop loss of 20%. So things all well and good. I recommend, particularly for new traders, you should look to risk less than 1% of your, like you should just start out, first of all, you should just start out on a test net. Like if you're a brand new trader, you should start out on testnet. Start out on testnet, Bybit. Well, Bybit's the best place to do it, but BitMEX, maybe back in the day. Bybit's the best place to do it. Bybit's got a nice, robust testnet. Create an account on there, get some fake BTC, and then trade your strategy. And then that's all you do. And then when you feel comfortable with that and you're making fake money consistently and you trust your system and take it seriously, then start trading for real. Take your strategy live, start forward testing it, see if you see the same results with real money that you do. Use small capital, $100, $1,000, keep your risk low, 1% per trade. And then once you're seeing results, you know, a couple dollars here, a couple dollars there, then you want to move up to 2, 3, maybe even 4% risk per trade. I mean, I stayed at 2% risk for years, you know, and I mostly take most of my trades at 2%. So yeah, can't forget to pay yourself, Kimazabi. Kimazabi says, I usually close 75 to 8% at target and raise stop. That way, if it runs, I have a little running. Yeah, so this is exactly what I do. I take 50% off of my first target, move my stop loss to break even, and then let it run if it's going to run. And if it doesn't, I just didn't make as much as I wanted. I still made some. Mr. Ether Robert Warner has his fingers crossed for 13K so we can really back that truck up, man. Really get that generational wealth purchase. Me too, man. Oh, I just realized we were stuck on the thing here. All right, let's move over to here. We got about, maybe like 5 minutes left, guys. Guys and gals, have I ever used Kraken Pro for trading? So on a $45,000 account, I just need to risk 40 per trade. I have used Kraken Pro. I have used Kraken. I really like Kraken. I really like Jimmy. So on 45K on an account, I don't know off the top of my, I feel like Kraken only gives you 5x leverage. I could be wrong about that. I use Kraken for cashing out, for converting crypto to USD. I don't really trade on there. I have traded on there, but it's been, I'm not plugged into it. But I feel like they give you 5x leverage. Maybe they give you 10x. If they give you a 10x, in your scenario, if you want to take a $45,000 trade using 10x leverage, you'd have to have $4,500 or euros, or which is whatever unit you want to talk about. Yeah. So 5x leverage, forgive me for not being a math whiz. I should have paid more attention to math class, but 45,000, you just divide by 5, you need $9,000. And that would be like an all-in position. And then your liquidation price would be 20%. If you're using 5x leverage, your liquidation price is 20%. But your stop loss is going to be wherever you want to put it. Personally, I use the average true range. I look at the average true range. Depending on what time frame I'm on, I'll take a multiple of the average true range. So I'll just subtract whatever the average true range is from my entry price, and that's my stop loss. And then I can just plug that into the calculator, what price I'm entering, what price my stop loss is, and how much money I have, and how much I want to risk. Like, that's the number you need to know. This is why trading is statistics. So let's say you take, here's the math I'm doing lately. So let's say that you take 360 trades a year. Okay. You're trading, basically taking one trade a day, just one trade a day. And you're not going to win all those trades. But let's say you only win 65% of the time, meaning 35% of the time you lose. Okay, that's cool. So let's say that you can do this with 5,000, 10,000, 20,000, 30,000, whatever, it doesn't matter. You can do it with $100, but you're going to take more risk because going to lose more of your account when you lose. But anyways, if you win 400, if you're using 2-to-1 risk to reward ratio, where you're losing $200 on a losing trade and you're making $400 on a winning trade, you do that 360 times a year at a 65% win rate. Let's do the math. 360 trades, right? Times 0.65. It's 235 winning trades a year. Okay. And if you're winning $400 on average when you win, it's $93,600 in profit. Now, you need to subtract from that your losing trades. So this is going to be 360 times 0.35. That's 126 times 200. $68,400. Some fees, you pay about 20, 30, 40, 50, 90% of that to the government. No, it's life-changing money for a lot of people. That's life-changing money for a lot of people. And doable. Completely doable. You just need to commit to it, put the money in the account, go do it. Anybody can do it. I was the worst trader in the world, like my first 2 years. And now I do this. Crypto Risk asks, have I ever considered Bybit copy trade? I have. Yeah, they talked to me about it. They want me to do it. I might do it. It's just the thing, right? Like, that's going to take time. You know, it's just another thing that I need to say. If I would have to say yes to. And if I say yes to that, I have to say no to a bunch of other things. You know what I mean? Because again, it's one thing. It's one thing when I have my Bybit account and I have my Signal group. So the signals that I'm already saying yes to Signal, right? So I take a lot of care and time and energy with the signals that I post. But I have my account separate from that. So I can take whatever trades I want. And the only thing that I care about and that members care about is that I'm giving them good signals. And that on average, they're making money. And they are. But if I set up the copy trading account, now I've got to care about every single trade that I make. Like, what? I can't be a degen at all. So, and then I got to set up another account if I want. It's just another thing that I would have to say yes to, which means that I'd have to say no to other things that I'm currently doing. And I don't want to do that. So, but we'll see, guys. We'll see. It is something that a lot of people have asked me to do, and it's something I've done in the past and people really liked it, and we'll see. We'll see. Okay. That's about all I've got for you guys today. Let's zoom over here and do our quick conclusion. Thank you guys so much for joining me for another exciting episode of the Breaking Bitcoin Market Update. We've laughed, we've cried. We've actually had really good conversations. Shout outs to everybody in the live chat, including Averdunk over there on Twitch. Great questions. Hopefully we can continue this the next time I'm live, which will be tomorrow, same time, same nation, same station. But that is the supper bell ringing, and you can call me anything you like, but don't call me late for supper, as my grandfather used to say. We will be back tomorrow. If you guys have any questions, comments, concerns, sarcastic remarks, hot stock tips, or death threats, please leave them in the comment section down below, and I will try to respond to them as quickly as possible. If you like the channel, if you enjoy the content, you can also give us a like and subscribe. And if you're watching on Twitch or DLive, a follow is always appreciated. Welcome to the community. Join our completely free Discord designed to help traders grow their skills, connect with other like-minded individuals, and enjoy the world of cryptocurrency markets. Link is in the description, discord.crackingcryptocurrency.com, in case you can't be bothered to scroll down there. We have lots of free material, lots of introductory material, including my free guide, The 5 Mistakes Holding You Back from Profitable Trading. Links to all of that in the description. And if you're interested in any of our indicators, our courses, our strategies, or to work personally with me and my team throughout 2023 to improve your trading and grow and build wealth in the cryptocurrency markets, there's lots of ways to do that. Lots of links down in the description, lots of ways to get involved. I will see you all tomorrow. Until then, trade safely and make sure to tip your waitresses. Cheers, guys.